Yes, lastly, we discussed the role of insurance and contingency planning. We were able to discover the relevance of insurance in contingency planning. Today we'll be moving to another interesting topic. Today it's going to be a very interesting topic. When people, when I remember my early days when I started when I joined the insurance industry, and I'm telling people about, oh, come and do insurance, this and that. Now, I mean, people were like, okay, let's say you want to insure maybe a 2 million naira worth of content, and maybe you are now asked to pay just 0.25 for fire. The next question most people will be asking is that 25,000 naira for 2 million cover. It always sounds ridiculous when when people hear what the premium you are to pay compared to the cover they want to enjoy. So some are tempted to say, is it real? Oh, insurance people, you have come again. Some people don't really believe it, that how is it working? Then how do you make for your profits? Those are the kinds of questions people do ask when you tell them, oh, you are paying 0.25% rate, premium rate for a cover of maybe 2 million or 200. By the time you look at the premium you are paying to the cover that is being promised, is always very, that premium is always very minute. So a lot of people don't really understand why is it like that. Some who want to sympathize with insurance company will say, how are they making it? Are they really making profits in insurance? Some will say, oh, maybe that's why they don't pay claim or something. But it is because they do not understand the concepts behind it. So that is what we'll be discussing this evening. We'll be talking about the law of large number and how is it a benefit to the insured. So our topic this evening is, how is the law of large number a benefit to the insured? From the background, from my introduction, I've made us understand that we want to unravel the mystery behind paying small premium to enjoy a large cover. Isn't that interesting? So this evening we're talking about how is law of large number a benefit to the insured, and what is this law of large number? It's a concept in insurance. The concept of insurance, we understand that the concept of insurance is a risk solution based concept. Insurance provides solution, risk. The insurance provides solution to risk issue. When you have, we've been talking about risk for some weeks now. We talked about some risks that are insurable and those are not insurable. So when it comes to the insurable risk, what the insurance does is that insurance takes over the burden of the insured. So in case there is a loss, the insurance step in to pay financial compensation to the insured. That is what insurance does. So how do they achieve this? With little premium, and the insurance is able to pay claim for when loss occurs. So, but we are not looking at how is it a benefit to the insurance. Now, we want to see how it affects the insured. How is it a benefit to the insured? Now, we know in insurance, when we talk about risk, the concept of risk, is about, we know that risk is an uncertainty, a probability. You are not sure that a loss may occur, a loss may not occur. So we make use of probability a lot in insurance. So it is that concept of probability that insurance use to determine, to look at, if this occurs, this is what will happen and all that. So, but how is it a benefit to the insured? That is our concern this evening. That is exactly where I'm going. I'm just trying to lay the foundation. Now, let's look at this. That law of large number is a statistical concept that calculate the average number of a loss occurring in an homogeneous exposure. What do I mean by an homogeneous exposure? Now let's look at the situation. Homogeneous exposure is when you have risk of identical risk with similar of the same nature. Now let's look at, you want to talk about fire, or let's say you want to talk about car insurance. All the cars, we put them in a pool. We talk about a pool of risk in insurance. So it is that pool. Insurance creates pool for each risk exposure. For a car, you have the pool for maybe for marine insurance, for all the kinds of insurance, because insurance are risk specific. Insurance is a risk based. You address each risk according to the nature of that risk. So the pool we form is what we mean by the large number. We create a large pool. So the larger the pool, when the pool is large, then the insurance, the insured is able to benefit from the pool. How do I mean? I want to work with example now. Now let's, even from the concept of this normal our coin. When you toss a coin, you can either have a head or a tail. That is the first occurrence. Now, if you now put it in the next occurrence, no, you cannot have head. You have a probability of having head, tail, and all that. So that is how you begin to look at the probability of I want to have a head. I want to have a head and a tail. That's the simple. The simple illustration of what the pool is. Now, how does it affect the insured? The insured enjoy from this pool when the pool is large. When the pool is large, the insured enjoy from it. That is even insurance in the company. For every insurance, that is why we have the regulators. The regulators always ensure that for an insurance company to start operating, you must have a minimum financial threshold. You must reach a threshold. So even for the new insurance company that may not have large pool, that is why they do more of reinsurance. So the law of large number is a benefit to the insured. I summarize it in these 5 topics, 5 benefits. The benefits of this law, and I've been able to describe that law, the law is when you have the pool of each risk, they are being categorized in their various segments, different homogeneous exposure. So this risk, the law of large number is a benefit to the insured. I've summarized it in 5 different benefits, under 5 different benefits, which are appropriate premium calculation, possibility of premium discounts, assurance of claim payments, prompt claim payments, then confidence in the insurance industry. So I'll take it one after the other. Appropriate premium calculation. The law of large number helps the insurance company to be able to calculate the appropriate premium that the insured will pay. So it is the knowledge of this large number, it is the knowledge of this pool. When a company is having a large pool, that is why you can see that maybe company A might decide to say, oh, they want to insure fire for a car for 5%. Another company, maybe they have a larger pool, but see they want to insure car for 4%. So it depends on that pool, on the homogeneous exposure that their car their car pool. It depends on their car pool, the risk they have been able to gather over a period of time. So that is appropriate premium calculation. The law of large number helps in the appropriate premium calculation. And when it's a benefit to the insured, when the insured is able to pay a lower premium and to still enjoy a good, appropriate cover. Now, another benefit of the law of large number is the possibility of premium discounts. The possibility of premium discounts. How do I mean by that? When an insurance company has a large pool of their different various homogeneous exposure, they can decide to give a further discount because they have a very large pool. So the more the merrier. The larger the pool, the tendency, the possibility of giving premium discounts, is there because there is a pool, they have a very large pool. So the third one is assurance of claim payments. Just like I've always made us understand that, even from the beginning of this program, I've always made us the major reason why insurance industry is in business, or why insurance companies are in business, is for them to be able to pay claim. Any insurance company that cannot pay claim, they are not in business. I hope we can relate to that. Any insurance company that are not in business, they are not. Any insurance company that they are not in business. So when the ability of any insurance company to be able to pay claim that ability lies in their pool. How large their risk is. I hope you can relate with that. So when the pool is large enough, there is no claim that will not be, once it is proven it is a genuine claim, it will be settled because that company has a large pool. So the company is not insolvent. The company is liquid enough, is solvent enough to attend to their claims. So the law of large number is a vital tool that insurance companies make use of, and it is a benefit to the insured because when the pool is large, the insured will enjoy their claim payments. The next one is prompt claim payments. It is true when the pool is large, the insurance company, they will not be racking their brain that how they won't be looking for how to make claim. They'll be able to settle their claim promptly. So that's another benefit of the law of large number to the insured. So this large number, I've not decided, this evening I decided to demystify how insurance is able to pay claim. From what I've been discussing with us, you agree with me that insurance has capacity to pay claim because insurance operates on that law that we call large number. When the insurance make use, when insurance company collects premium, when an insured is paying premium, is adding to that pool. Anytime you pay your premium, you are adding to that pool. Just like when I was introducing this topic, I said it's a probability. You are paying premium because there is a probability that you may have a loss. You may have a loss, you may not have a loss. So if you have a loss, you will be settled from the pool. If you do not have a loss, some other persons that have the loss will be settled from the pool. So the larger the pool, the merrier. The larger the pool, everybody is comfortable. There is appropriate premium calculation. There's tendency of you paying little premium for a large cover. There's a possibility of premium discount. There's assurance of claim payment, and there's assurance of prompt claim settlement. I hope you can all relate with that. And the last of it that are penciled down here is confidence in the insurance industry. When we have this understanding that the insurance industry operates on this law of large number, we have confidence. We know that, what I mean, if you have that understanding that, oh, insurance don't just plug money from anywhere. Insurance people don't, when you have this understanding, that's skepticism, because a lot of people, they don't really actually understand this law. They don't actually understand this concept. So they are always scared that, do insurance pay claim? How can I pay small premium to get cover? But with this understanding this evening, you agree with me that insurance industry, they have capacity to pay their claim because they are operating on a particular law, which we call the law of large number. When the pool rate, is not everybody that pay premium that have loss. So, but it is the out of the, when everybody contribute their quota of premium, the premium you are paying is your contribution to the pool, to the risk pool. So, and it's not everybody that pay premium that will now eventually have that loss. So it is from the money. That's why in China we say those who are happy, they pay for those who are crying. Do you understand? So that is the concept. That is the concept behind the premium payment, the claim settlement in insurance, and that is how the insured benefits from the law of large number. I hope we can all relate with this. So that is what I have for us this evening. So this evening, we started risk almost 6 or 7 weeks now. I've been talking about risk. So this evening I've been able to break it down to us. So many people, they are always like, how does insurance, how do they make their profit, or how can I pay 0.2% or 0.25%, maybe for a 2 million cover? That would just be like 25,000 naira for a 20. I mean, saying that, oh, if this loss occurs, we will compensate it to the tune of 2 million. I mean, it sounds crazy, right? But this evening, I've been able to break it down to us that it does not just happen. It happens on a principle, on a concept, on a law, which we call law of large number in insurance balance. And this law of large number, it's a benefit to the insured. How is it a benefit to the insured? It helps in the calculation of premium. It helps the insured to enjoy premium discounts when the pool is large enough. There is assurance of claim payments, and there is prompt claim settlement, and the insured has confidence in the insurance industry. So that is what I've been able to discuss with us this evening. I believe we can all relate with that. I want to stop now, and if anybody has a question, this is the time for your question. Thank you, everyone. Let me entertain some questions now. It's just 30 minutes interactive session with this group. So it's time for me to hear from you. Do I have anyone raising hand? Kindly raise your hand or kindly unmute and ask your question. I believe we can all relate with the law of large number. How the law of large number, how is it a benefit to the insured? I believe we can relate with that. I believe we can relate with the fact that the law of large number is a benefit to the insured. Can I have anyone raising hand, or can I have anyone that wants to contribute? If you don't have questions, do you have anything to say? Okay, Mr. Peter, can you unmute and ask a question, sir?
Okay. Thank you very much, madam, for the wonderful presentation. But I closely follow the presentation. But my point is this, that the law of large number, when you say it is a benefit to us for them to be able to pay to pay claims promptly, to have confidence in the industry, and so on and so forth. Is that not the obligation of the insurer, whether there is large number or there is no large number? Is it not all those obligations, are the insurer not supposed to perform them before we even talk about the large number? Okay. Then the second question I want to ask is that if an insurance company have an infinite number of insured, that is, let me say a kind of hypothetical example, that an insurer has infinite number of insured. So does that mean that the premium that they are charging us is going to come down? Because as you said, that one of the benefits is that there may be a discount even on the premium that we are paying. So does that mean that if they now have, when I say infinite, I mean a very large number, does that mean that the premium that we are going to pay is likely going to come down comparable to what we are paying now? Because I give you an example. I think for almost 30 decades now, we have been paying the same amount for car insurance. It has always been 5,000. At least since I've been to date, we have been paying 5,000 naira for car insurance. So the question is, let's say instead of, I don't know the number of people that are actually insuring their car, but let us assume that currently we have about 20 million cars in Nigeria, and we are paying 5,000 naira every year to renew our insurance policy. Are you saying that if we now have 200 million cars in Nigeria, there is tendency that the premium may come down, even though the risk being covered has also increased? So that's my question, Mark. Thank you very much.
Okay, thank you, sir, for your question. Yes, you said, is it not the obligation of insurers to pay their claim and all that? Yes, it's their obligation, but what have demystified for us this evening is the fact that I said, no, when you go out there and you tell people to pay this percentage of premium to enjoy this huge cover, the frequently asked question are usually, how can I pay this small cover and this small premium to enjoy this large cover? For instance, how can I pay 25,000 naira to enjoy 2 million naira cover? Do you understand? So I'm just telling you the principle, the concepts, how insurer arrive at how they are able to pay claim and still run their business. So it is still a benefit to the insured because insured enjoy claim payments. So yes, it's the obligation of the insured. And I said this when I was starting this presentation. I said even the newly insurance company that may not have as large pool as the old and existing insurance company, there is still, that is why there is regulator. The NICOM will ensure that before you can float an insurance company, you have there is a certain amount of money you can have. Do you understand? So that's one, is to ensure that the company is solvent enough to meet her obligation. So even if a newly insurance company does not have as large pool, it will do more of reinsurance just to be able to meet up her obligation. So That is the prime, that's the objective, that's the obligation. But I'm telling you, it's like the behind the scene, you know, in the movies when they are shooting, when they will say behind the scene. I've only unraveled to us the behind the scene, the concept behind how insurance is able to meet up its obligation, paying claims. I believe I've been able to answer that one. Then the other one that we made mention of, third-party insurance. The third-party insurance is statutory. It's except if there's a law that want to bring it down. That is the perfect example of the large number will be when it is on a comprehensive insurance. In the years, some years ago, comprehensive car insurance used to be 10%. Now it is now 5%. But some companies that have a larger pool, they are taking 4%. I hope you can relate with that. So when it comes to that is what I mean by you may even enjoy, and even if you have been doing insurance with a particular insurance company, there's what you call long-term term agreement. If you have been paying premium for maybe like 5 years, 10 years, you have not have paid, you will have premium, you will have discount on your, there's the thing skip my mind now. We call it no claim discount, something, no claim discounts. Do we understand? So it depends on the relationship you have created with your insurer. So, and it depends on how large the pool of that insurance company is. So that is what I mean by there is that possibility of enjoying premium discounts. Have I been able to answer you your question, sir?
Yes, ma'am. Thank you very much.
Thank you very much, sir. Do I have another person? Any other question in the house? Or contribution? Let me see. Okay. So if there's no other question, if there's no other question, this is my contacts. If you have any insurance needs, or you have someone beside you that is talking about insurance, who has insurance needs, kindly reach out to me on info@graceojoblog.com or info@bimboconsultancyservices.com. You can also call me on 080-269-40605. And I usually upload this meeting to YouTube. You can go back to Grace Ojo blog channel and catch up with the previous editions. Once you even type Grace Ojo on Google, it will bring it out for you, the previous edition, so you just see it. So once you just Google Grace Ojo, you see my YouTube channel coming up, and you'll be able to catch up with the previous edition. If there's no other question, on this note, I want to appreciate everyone that have taken out time out of their busy schedule to attend this meeting, and those of you that will still watch the meeting on Facebook or on my YouTube. I want to say thank you very much. Thanks for the encouragement. I really want to appreciate you. And let's meet again, same time next week, between 5:30 and 6 on Wednesday next week. I want to say thank you. I want to appreciate everyone. And I want to say, do have a great evening. Thank you very much, Madam Funto. I want to say thank you, Mr. Rabiu Afolabi. Thank you, Ofonime. Thank you, Life. I want to say thank you, everyone. I want to appreciate everyone that has attended this meeting. Do have a great evening. Bye-bye.
Thank you very much, Mrs.
Thank you, Madam. Thank
Bye.
you, man. I really appreciate that. Do have a great evening, man. Everyone, have